There are times I wake up and I feel oh so pretty. There are times when I go to bed and yes, I am tired. But there are days like today where I feel like a freight train going around the bend. Not sure if I'm going to hold on to the tracks, but bet your ass I am. Got a lot to cover today, everyone. One of the big ones we're going to talk about is Jerome Powell and the Fed. We're also going to talk about drones. Drones are not mining Bitcoin, although that was a good suggestion. Drones, what's the deal with that? Who's dealing with them? It's a pain in the butt. I want answers. What's up, everyone? How are y'all doing? We got time until the decision. Fed decision comes out in 13 minutes. We will be getting that information. I've already got it queued up on the screen. You know the deal. So once that information goes live, I will bring it to you. So we got 13 minutes to hang out. And then once the decision goes live, which we're most likely going to get a rate cut, okay? Then we're going to talk a little bit. And then what's going to happen is we're going to watch Jerome Powell be stingy. Dude, I'm telling you, what if today is the day that he's the biggest, like just stingy a-hole in the world? Like, for real. Like, we've seen a few of these press conferences where he's gone off on people. And even the one time the guy asked him a question, he's like, you respect me when you talk to me. And I was like, yo, okay, Jerome's getting rough on everyone. But I think we got to start wondering how hawkish he's going to be regarding this. Because inflation's been a little high lately. Let's be real here. That's not good. Prices are still high. Anyone that's bought eggs recently, egg prices have gone through the freaking roof. Anyone here looking to buy a home? Home prices are stupid and the inventories are horrible. There is like hardly crap to pick from. Jokes says, how's your day going, Klaus? Watching from Grafenwort, Germany. Wow. Fans from across the pond and then some. Hello from Norway. Love it. Jeremy's in the house. Trick's in the house. It's Been a Hard Life is in the house. What's up, channel members? How you doing? What's up, chicks and dudes? By the way, my son's channel's pinned at the top of the chat. Check it out. Sub to it. It's free. His channel is actually really funny. He's not naughty like me. He's got a really great sense of humor. He's not naughty like me. So if you got kids or like young adults that like gaming stuff, it is pretty hilarious. Pretty hilarious. Jeremy says, chillin'. How about me? I'm doing pretty good. I got 2 workouts done so far today. 1 video done. I ran a couple errands. After the live stream, I got to do mobility work. And then the worst part is I got to put the headlamp on because I got to go running tonight with my wife. Yeah, I got to start like building up for last man standing. Jonathan says, Klaus, for us new XRPers, I bought right before Thanksgiving. Should we just hold and hope for the best? Honestly, Jonathan, it's all about what your expectations are and what your individual situations are. Seriously, I know that sounds like a very generic answer, but it's true. There are some people that have enough disposable income where they can place risky bets. And they are willing to lose their money because they're also thinking, hey, there's a chance for me to hit a mega home run. There are people out there that, you know, live paycheck to paycheck, really have to work hard. And they put, you know, what they can into certain things. And they're like, hey, I only can tolerate so much risk. So honestly, everyone's story is different. The best thing you can do, know what your expectations are, right? Know what time frame you want to do stuff in, and be informed. If you can do those 3 over and over and over, you'll be good to go, man. All right, let's see. What do we got going on? South Africa in the house. Delaware in the house. Nice, love it. Norway. North Central Pennsylvania in the house where the drones are definitely. What's up, Pennsylvania? How are you doing? You know, gotta be honest with everyone here. CPI data being a little hot. I think we're starting to worry a little bit. Just a little. Just not a lot. Not a lot. I'm talking worries in a little. Like lowercase w, okay? Lowercase w, small percentage. We're worrying a little. And the reason we're worrying is what I don't want to see is an overall uptrend of this with inflation, right? the thing with food, the thing with building supplies, the thing with housing, the thing with energy costs, it's still way too high comparatively. And I think that a lot of us out there are saying, hey, things still aren't getting better price-wise. So even if the numbers are like, hey, inflation this and this and this, the pinch is still felt pretty heavily by us. And we need that to get fixed. So yes, crypto important, but let's also make sure we take care of ourselves in a daily financial sense too, and get our government to work better for us. Jerome Powell, let's talk quick, okay? Let's talk quick. Jerome Powell, most likely he's going to drop a quarter, okay? JP, dropping the quarter. What tools does he really have to help with inflation? Right? I mean, think about what can he really do? What can Jerome Powell really do about the price of eggs? Right? He really can't do anything. Can Jerome, when he cuts rates, does that help at all with milk being cheaper? No, not really. So, like, you see what I'm saying? He doesn't have many tools at his disposal. They're really big tools. They're big hammers. They're not really good, fine, dialed-in instruments, right? So he doesn't have a lot of tools. So who are the real people that should be helping us with the inflation stuff? It's the government, right? A lot of times the reason things are so expensive is because what? Is because we have way too many rules and regulations in the way. For those of you that have been following the Department of Governmental Efficiency, that is my neck of the woods. I am a Lean Six Sigma person, right? That is my background. That is my professional background. That is all me. I am all about efficiency. I'm all about balance. I'm all about creating great work environments, like where it's a holistic approach. It's very important, right? So this whole idea of them trying to be efficient is seriously what we need. Because there are too many regulations, there are too much hoops and thises and that's, and the biggest one I could bring up was when the Rona was happening, all right? When the Rona was happening, we didn't have formula here in the United States. There was a formula shortage. Babies could not get formula. That is a big fucking problem in a first world country. So then on top of that, you're sitting here going, okay, not getting formula problems. The problem was, the reason we didn't have formula is not because there was necessarily a shortage or such. No, it was the regulations put in place by the government and what was allowed to be put in it made it restrictive. So what did we do? We got formula from across the pond from the UK. Yeah, the UK bailed out, all right? Bailed out the United States with formula. Are UK babies any different with formula? No, they just don't have the government as stupid as the United States does. So Jerome's got a big hammer. Probably a big dong too, because he does act like he carries big wood. I gotta be honest with you. Certain people have that. All right? Certain people have that. Jeremy Touche, love me some Crypto with Klaus. Love it. Appreciate it, sir. And so he's got this hammer. It's not that good for fixing stuff. The government's really the ones that should be fixing stuff. I mean, let's be real here. Has the government fixed the energy crisis at all? No. What about the whole promise with like the green energy thing with Obama and all the windmills and stuff? Unless you live in the central United States where I used to, in the Dakotas and all that, guess what? You ain't getting wind anywhere. What about the solar push? Bullshit. What about the idea with, the whole EV push from the government? That's good for us. No, it's not. You ever seen how they do lithium? You ever seen how they do cobalt mining? That's not really good for the environment. And now all of a sudden, we got a whole bunch of freaking Teslas where the batteries are dead, toxic AF, sitting there, and we don't know what to do with them. Like, are you serious? And that's what I'm saying. See, so the government is behind all of this. The government isn't like making things more efficient. And also, it's not just the US, this is the UK as well. The UK has a massive problem with this. My eyes have recently been opened up to more how the UK functions with the political system. And I'm like, holy crap. The United States is jacked up AF over here. Well, the UK's jacked up AF over here as well. XRP Bible donating some support on the channel from up north. Says, God bless you, Klaus. Well, thank you. I appreciate that. And everyone, give a big thank you to XP Bible for supporting the channel. Customary that we do that. But like that's the thing. Like so Jerome, I get it. He's an ass. I get it. He's gonna be rude to us today. Seriously, if this is your first time, you are going to see him be rude. He is going to be very hawkish. He's going to be putting up it's all about CPI. It's all about this. It's all about that. He's going to be very harsh about this today because he wants to cool things down. He wants to cool down the stock markets. He wants to cool down markets in general. Okay? Why? Because things are heating up. Inflation's going up and the markets are going up. That is not a good deal. So when we look at this, Jerome only has so much to work with. He's going to be the scapegoat of this. But it's the government that should be fixing stuff. Jason says, you want to talk about big dongs? That Tom Homan, Jason, I was just reading it, dude. Jason, come on now. Come on now. I wanted to read that, my guy. You're good with that. Yeah, let stuff fly in here. As long as there is not, like, racist stuff, I am cool for y'all to just let stuff go. I mean, like, don't be, like, ripping on each other. Nothing, like, dumb like that. But, like, share your viewpoints. But, like, make sure you respect other people, too. And make sure you respect other people's cultures because their cultures have a big influence on how they perceive the world. Jeremy Touche dropped some support at the channel. Says, hit that like, share, and subscribe. Drop a donation if you love what you're watching. Channel support, always appreciated. Yeah, Jeremy, seriously, thank you so much, sir. Huge support from everyone. This has been a huge boom since the Trump elections. And I got to be honest with you, the channel is growing hardcore fast. B-Boop says, damn, I pulled up at the dentist. I'm going to miss this. Dude, why? Oh, the dentist. Why would you? Well, okay. So you either schedule the dentist appointment or you hang out with Jerome Powell. Both are going to be painful. I'm just throwing it out there. Everyone give Jeremy a big thank you. Trick giving us the thank you as well. All right. The announcement coming in 2 minutes. All right. If you want to follow this, all right, as soon as this video is over, it'll be in the live stream folder. You're welcome to watch it. And everything you're seeing today will be linked in the description below. Pretty cool. LD Roberts says the UK is, hence why I left 11 years ago. Dubai, baby. Yeah, I actually moved out of Illinois. I moved my whole family out of Illinois. My wife and I were longtime residents, born and raised. And we both lived in Illinois for a long time. I lived there for 30 years. And we got out because we saw just how much Illinois was eroding. It was a rough one. You'd pay $10,000 to $12,000 a year taxes on a home, and your school system would be absolute junk. Absolute junk. Crazy Camel dropping support on the channel. Thank you very kindly. Give a big thank you to Crazy Camel as well. But yeah, we did. Ooh, Robert Melvin's in the house. And hold on. Wait. I'm trying not to like. Hold on, let me see. Where I just had it. It's gonna be. I'm looking. I just rearranged my room because I set up. I got a new laptop, so like I'm trying to work on it for my remote thing. Hold on 1 second here, real quick. Oh. All right. We got to do it. Look, this is why live streams are cool. And I get it. You're probably like, oh, Klaus, Jerome's probably already announced what the rate thing is. Look, he's gonna cut it a quarter. But look what I got up on the screen. PCU, girlfriend. PCU. That's right. We're not going to protest. And speaking of we're not going to protest, guess what? We got rate decision in, and the committee seeks to do this to support its goals. The committee decided to lower the target rate Fed fund rate by a 1/4 percentage point, girlfriend. There you go. We got the quarter, but check it out. PCU up on the screen. And yes, they cut rates. It is official. Let me put this in the chat. It is official. I can't type either, Jason, so don't feel bad. Rates have been cut a 1/4. There you go. Here, look. For those of you that are visually impaired, I will be a nice host. I will even zoom that son of a bitch out super big. Look at that. No reason. Klaus, did they change the rates? I don't know. Look at the screen. What do you think is up on the screen? I see funds rate by 1/4 percentage point. Awesome. They cut it. They cut it by a 1/4. Isn't that awesome? But yeah, PCU, for those of you who don't know, is a freaking awesome movie. Just right there. Ooh, balls. Love the name. Says Fidelity is holding a crypto meeting right now. Who was it? Was it Schwab? Was it who? It was. I'm trying to think if it was Charles Schwab or someone else. They are actually going to be opening up a crypto exchange. For real. I was like, holy, I think it was Charles Schwab. Huh. Marathon, Florida Keys, love it. Oh man, that is one of the places I want to go there and I want to fish. Says, thanks, Klaus, for all the knowledge you provide to us. It's much appreciated. Ooh. See, what do we got? We got PCU up on the screen. We got Jerome cutting it a quarter. We got Brandon giving us some gold price. And thanks, Brandon. Brandon's saying 26.30 gold, 30 silver. Yeah, I'm totally cool with that. Ball says, I think it was Schwab. Yeah, I do. I think it was Schwab that said they're going to open up a crypto exchange. I would be very interested to see that. Okay, let's talk about that, okay? Because we know Fed cut it by a quarter. Awesome. Cut it by a quarter. Cool. Awesome. Schwab is again part of that really boring money, right? It's okay. You have different levels of risk. Okay, you have some people that can just ape into stuff. Some people that, you know what I mean, like you could just do whatever. Like Schwab is like some of the most prude money out there. So if Schwab opens up a crypto exchange and they're very successful about it, holy crap, that means we've like got like pretty much every level of like speculation, whether it's like high or low risk, involved in the market. That's awesome. That is full discovery. That's full financial discovery up and down the ladder. That is awesome. But we got to see the results from them. Now, on the flip side, right? So if Schwab opens up the exchange and it sucks ass, well, then we kind of know that crypto has a ceiling, right? That there's certain risk factors that are going to stay financially away from it. So we're going to see. Let's see, what do we got up on the screen? XRP at 249, H-bar 30 cents, Sol 217. Sol has just been, woof. It's been struggling. ETH, by the way, laggard too. 38.90 ETH. That's not hot. That's not hot at all. 38.90 ETH is a joke. Doge still looking healthy. 38.8. No, it's not 40 cents, but still close. Let me take a quick sip of my drink here. Electrolytes, by the way, nothing crazy. I do have one more training session to do today, so I gotta do it. Oh, Straight Shogun says, yo, catching the live action while at work, laying some pretty welds down. Are you laying down dimes, kind sir? I've been known to weld a time or two. Mine don't look like dimes. They look like if you blew a snot rocket out on the ground and it stuck to something. That's what my welds look like. But they hold. I haven't had any break yet. Just throwing it out there. Johnny Appleseed chimes in. Charles Schwab manages $7 trillion. Yeah, and that's what I'm saying is you do have some real prude money out there. Lots of it. And you also have to think too is the time frame for this change that we're going through right now. And let's take this just little serious, just for a little bit, okay? The time frame we're at in all of this is so different for everyone in every country. There are certain countries that, I kid you not, 5 years from now, we're going to be talking about, oh man, they're finally buying BTC at 250,000. Oh my God, what morons. Like, it's just always how it is. There's always someone late to the party. And you are going to see quite a few countries, companies, and states late to the party. I just brought up another story earlier today about someone wanting to add BTC to their strategic reserve. Look, BTC gets mined out by, what is it, like 2040 or something like that? Well, then what? Like, once all the BTC is mined, then what? Are we just playing, like, with collectibles? Like, you know what I'm saying? Because, like, BTC to move money, that's not why people are getting into it. They're getting into it because, like, everyone else is getting into it as a store of value. Because it's beating inflation. It's beating a whole bunch of stuff. You know? That's the deal. I guess we all just have to kind of make sure that we zoom out and think that there are going to be laggards to the market. And there's always going to be something new. Right? I mean, think about this. We are very blessed right now to be having lived through an era where we're seeing a huge financial shift in digital type currencies and digital payments, period. Because think about that. You zoom it back a little bit ago, you had to like put the credit card in the machine and swipe it back and forth, you know what I mean? Like where it would do the imprint with the paper on there. Like that's not that long ago. Paying with debit card, paying, you know, with all that kind of stuff, that's still digital money, right? That's all done internetally, right? I mean, checks, you know, people are using less and less, but this is all the transition that we're going through live right now, and I think this is cool. Like, I think this is very cool, but remember, though, there's always something new that comes out, right? There's always something that's going to replace the something, you know? So if we do pivot from gold to then more digital assets, then you know we're going to pivot to something else maybe 2 or 3 generations later, 4 generations later, whatever the case may be. It's just how the world works. It's evolution and financial evolution, and I want to highlight something. And it's speaking as zooming out, because you do have to zoom out, okay? And I do stocks. I love stocks, but that's me. I do that in my private stuff. That's this guy. But when we zoom out even further, I want you to think about this. No government, no money, and like nothing has really ever stood the test of time, right? I mean, there are places that I have visited that are no longer the same places anymore. East Germany, right? I mean, very different. What about all the areas, you know, in the Baltic region? That's been diced up differently. Eastern Bloc countries, and that's all relatively recent. So when you think about that, change is always going to happen. You're always going to have something new come up. But how long does the thing that you're in last, right? And what we're noticing is as life is moving forward, as technology is juicy, this stuff speeds up, right? Because the information spreads faster. I mean, the stock market crash, right, in the late 20s, could you imagine how bad that would have been if they actually had information that got to people like instantly like we have now? Because you wonder why the market crashes so quick across the board, because we all get alerts on our phones, we all get alerts on YouTube, and all of a sudden we can all search stuff like instantly. We don't have to wait for the newspaper to come out. You don't have to wait for your dial-up modem to take 10 minutes. The price has already dropped 10% and you screwed out. So there's this constant evolution with financial products and with finance in general. I don't know about you, but the Roman Empire was at one time very, very strong. Last time I checked, there ain't no fucking Spartans hiking around my neck of the woods. You know, I mean, Germany was once like a mega powerful nation, like engulfed most of Europe. Not the case anymore. And this is recent history. So just kind of always make sure you zoom out and always know what your risk appetite is. Let's see. XRP, market wants more. Plain and simple. We saw some juicy testing. I like it, but the market wants more. The market wants to know what the deal is in terms of, are we getting regs right away? Because we still got a lot of money on the sideline that doesn't want to get into crypto until we actually get the regs. Jerome, okay, gave us a quarter. It's really big up on the screen. Even if you got vision problems, hopefully you should be able to say that or see that. Dropped it a quarter. Okay, cool. Keeps us there. That's the deal. CME group, yeah, pretty accurate. Should probably follow it. Linked in the description below. The big thing we're worried about, how many more rate cuts are we going to get if CPI data keeps getting hot? That's a problem. Now, will this, what we're dealing with right now, crush the crypto boom? Not a chance in hell. It doesn't help it though. Okay, that's the impact of what you're seeing with this level macro news right now is, okay. You want rates on your side, plain and simple. When rates are down, you can take more risk because money is cheaper. Venture capital, who loves risky stuff like crypto, waits for money to come down. And no, I'm not Sparta. Venture capital says, yo, rates, they're going to be lower in 6 months. Well, we'll wait 6 months. Cool. Awesome. You don't get it, and that keeps venture capital money to the sideline. Now, wait a second here. Now, hold up. The big thing, though, that's looked juicy for all of crypto is what? A change in the regulatory dynamic, okay? That is a big, heavy, high-gravity object. That is big. Rates with the Fed? Small. Not minuscule, but small. Pequeño. Or pequeña. I don't know if this thing is a chick or a dude, so it's pequeño or pequeña. One of the two. So you got the big mass of the global shift, right, with how this pro-crypto policy globally is happening, which is good. It would be bigger if rates came down faster. The only way rates can come down faster is if we get CPI data that starts coming down again. We have to get closer to the 2.0 range. We have to. If we don't, things will stay expensive for me and you. Yes, crypto hot and sexy, love it. Yes, making money, love it. But if I'm making money and my money is getting burned heavily by inflation, just like a runaway freight train, then are we really winning? Right? So the players out there that are doing the store of value play, which is really cool, are hoping to beat all this inflation crap. For those of us, all right, for those of us that are looking at it going, hey, we just, like, cool, crypto can make more money, but I don't want to pay like $7 for a gallon of milk. I don't want to pay like $6 for a dozen eggs. Like, I don't want to pay like $8 a gallon for gasoline. Like, then what does it matter how many zeros you got in your bank account if those zeros get eaten up with inflation? Just throwing it out there. You want the 10-year chart for inflation. There you go, girlfriend. There you go. That is the 10-year. So the 10-year, optimistic. But the problem, TNT, tomorrow's news today. Thank you very much. I said that correctly. Remember, these numbers are compounded on each other, okay? So watch what happens here. This is how you actually calculate true inflation. See how this November 2024 number is 2.7? You have to add that 2.7 to the previous year's November, which is 3.1. 2.7 to 3.1, everyone, 5.8. Add 5.8 to what, everyone? The previous year's 5.8 to 7.1 is what? 12.9. Add 12.9 to the previous year's 16.8. You're looking at what? 20.7? So see what I'm saying? That's the big scary thing. Now wait, add that 20.7 to the previous one and watch this. Now you're at what? 21, 22%. That's crazy. So crypto, hot, spicy, naughty, and relevant, love it. But yo, prices have to come down because they're outpacing so many other things right now. They're outpacing a lot of wages. So just throwing it out there. Yes, we did get the news, David Funderburk. We got a quarter cut. Just thought I'd throw it out there for you. So, okay. We got the quarter cut from the Fed. We've seen the market want to pump it, not hold it. What is the market looking for? The market's waiting for more regs, more of the news we've been dealing with to hit the ground. And now we're waiting for what? Jerome Powell, who's going to be on the mic in 15 minutes. So now what I'm going to do is this. I am going to open it up to you. To you. What would you like to talk about? What would you like to ask? I would like to hear that. So please comment and let's see. Yeah, let me get a drink too while I'm doing this here. And in 15 minutes, Jerome Powell is coming live. And real quick, yeah, totally can't wait until Musk starts implementing things with Ramaswamy. The whole efficiency thing is huge. It is big. The efficiency thing is going to clear you up or clear things up right away. It'll save. Just throwing it out there. CJM says, would you speak to the volume of available XRP? Does the supply of 100 billion XRP tokens give you the concern that the coin will trade at a high price? No, Okay, here's the thing. It matters if no one's into it, right? If no one's into it, then yes, a really big supply is a problem. But if more and more people get into it, and more people start seeing that return on it, which then brings more people into it, then you don't see it as a problem, right? So it honestly depends on what people are going to do with it. Are you going to have more companies hold it like store of value? If XRP takes a store of value turn like BTC does, then I wouldn't worry. I would not worry at all. Because people can gobble that up at that price so quickly. The big one, RLUSD. Totally agree with that. Totally agree with that. Dennis Wentz says, what is the next big news coming our way after the Fed announcement? Okay, so after the Fed announcement, what do we got? We got some labor reports coming out. No one gives a shit about housing right now because it's a very slow time of year, so we're not really too worried about that. Springtime is when we're going to start paying more attention to housing. Big event. What do you have? You're going to have GDP reports coming out in a few weeks. You're also going to have CPI data coming out in like 3.5 weeks. You're going to have holiday sales. That's going to be the big one that I'm going to be paying attention to in the near term. It's going to be holiday sales. The reason that holiday sales is big is that's retail, right? That's us. That's what can really fuel a lot of these crypto runs, especially for the alts, right? I think we can see that the alts are definitely more the retail environment. BTC is really starting to lean institutionally. Like it really is. A lot of big wangs playing there. Yes, Jerome can blow me where the Pampers is. Good job in the PCU quote. PCU up on the screen. Shout out. So yeah, holiday sales, CPI data, and honestly, as long as nothing stupid happens. Just throwing it out there. Let's see, what do we got? Does Trump have the power to sack Powell? No. Gary, good question on that. Here's the deal, okay? Trump put Powell in place, right? Trump was the one that appointed him. Now, here's the thing with that, is those two were really good with each other until Jerome really wanted to start playing up with rates, and Trump did not want that. Now, here's the thing. Just because those two didn't agree, you know what happened though? Powell stuck to his word. Trump respects that. All right? There was an interview Trump did about a week ago where he said, no, I do not plan on replacing Powell. As much as Powell's a prick, got to be honest with you, he sticks to his guns. And remember, there's not much he can do. He can't change the regulations. He can't help housing. Like, he can't stop the government from taxing us to death and pissing our money away. He can't fix any of that. All he can do is raise lower paws and do some quantitative junk. Prop up some markets. That's all he's got. Ozzy says, so does this affect the market moving forward? Just got here. What's going to affect the market moving forward is his speech at 2:30, which is 10 minutes away. Because if his speech is all about where we might even raise rates, if he even hints at raising rates, you're going to see the market go down red. Not a lot, but just it will react to the news. What we're expecting from Powell is for him to be very hawkish and to basically say he's going to wait for the data to point him in the direction, but he may be doing it at an easier pace if it ticks up. You're going to get something like that. Jay Powell is Tyler Rice says it. Jay Powell is the GOAT, man. Seen way worse than Powell is great. Powell, like seriously, when all things considered, like he has pretty much stuck to his guns. And I got to be honest with you. He reacted late. That's my big criticism of Powell. But once he came to it with 3 75 basis point cuts in a row. He was late to the party, but when he came to the party, he brought handles. Just throwing it out there. Let's see, what else do we got? 25 rate cut. The next one, real quick here. The next one is the January contract. And on the January contract, basically the market is still thinking, you know what, we're going to be here. We're going to be here. So I don't know. Market's saying pause in January, maybe a quarter, most likely a pause. It's going to come down to CPI data. If it peaks up and keeps going like this, it's going to suck. Gonna suck. Straight Shogun says, got my father-in-law watching your videos now. He says you sound like Pauly Shore too. Love the angles you work. Feel like I'm listening to you, homie, and that makes things comfortable. I appreciate that. Yeah, I remember Pauly Shore in the day. He did the movie where he was with the farmer chick. That was freaking hilarious. God, what was that? And that chick was smoking hot too. Yeah, where he wanted to milk the cows or something like that, and they all made fun of him for it. That movie was freaking hilarious. Big thing, all right? Big thing is this, all right? We're going to have the Fed. You're going to have rates, but you also got a bigger bullish momentum from the fact that we're getting what, everyone? Regs in 2025. If we do not get regs in 2025, I will consider that a failure. Son-in-law, someone got it. Cameron got it. Son-in-law, well done, son-in-law. Seriously, if we don't get regs in 2025, I will consider that a failure here by the Republicans. Because you have control of the House, Senate, and presidency. You could put through anything. Anything. Parth says rate cuts, good or bad for crypto? Rate cuts are good for crypto. Rate cuts, most importantly a lot of the alts find funding from venture capital. Venture capital is risky. Venture capital can burn you. Okay, what I mean? Yes, he did cut rates. But the deal is, all right? The deal is rates are good because venture capital's money, they can access it cheaper. Which means when money is cheaper, you could play riskier things. If you and I go to the casino, right? And you're like, dude, let's do some slots, and we play like dollar slots, right? Cool. If I hand you money, right? Like my money, and be like, dude, come on, go play the big ones over there. You're going to feel more comfortable because, right, that's less risky money. That's what it's like with rates coming down. It's less risky money. Someone said something about Google News. I did not hear about that. Google News, that'd be kind of cool. Jerome Powell coming on the mic. Honestly, the market right now is really, really doing one thing. The market right now is treading water until January 20th. Can we survive the next 4 weeks without anything stupid happening? Can we survive without the drones blowing stuff up? Can we survive without the Middle East heating up? Can we survive without any other stupid stuff in this world that could shake things up over these next 4 weeks? That's what the market wants to know. Players have made their plays. You've seen that. We touched some all-time highs here and there, right? BTC likes to touch it. That's good, but it can't hold it. XRP pumps, but it can't hold it. XLM pumps, but can't hold it. Why? Because we're waiting. We're waiting for the action. You still got the SEC just really leaving a poor mark altogether on crypto. And real quick, while I wanted to share this with you, ouch, man, by the way, is ouch. When it comes to the swing from altcoin season to BTC season, dude, we were happy AF, man. And then all of a sudden, yeah, we saw what happened. We went from 87 in altcoin season to really swinging it on down where BTC is getting the dominance again. And that's a bummer. That would be a bummer. Titan Show says, if Trump, the feds, buy over 1 billion in Bitcoin, that would be about 8%. Will Bitcoin or all crypto go up by 8%? Here's the thing, though. There's still supply, though, and this is what you got to remember. The supply, you've got miners that can sell. You've got miners that have been hodling. You've got a bunch of old OG wallets that have been hodling. So you've got a whole bunch on exchanges. You got BTC everywhere. And I'm telling you, I think there's always going to be players getting in and out. In and out. Now, in terms of the finite squeeze on it, okay, but what happens if there's a limited supply of BTC and everyone wants to get into it, then what? You're going to be like, okay, well, what else is there? I mean, like, because that's honestly what it is, right? I mean, think about any, like, fad that's gone out. Like, any, like, fad, like, oh, okay, you moved from this. What about the Stanley Cup fad, right? You know, you did that. You go to the next one. People are like, oh, man, I want to live in Beverly Hills. Beverly Hills is too expensive. Well, what's the next one? You know, it's whenever something gets priced out, people rotate. And you're going to see that with BTC. You're going to see that there's not going to be that much juice out there. Or that people are going to feel like the juice isn't there. The juice isn't enough, right? It's going to happen. It happens with everything. Seriously, think about it. It happens with everything. Think about anything out there that has had like a speculative oomph. Oil, right? There is definitely a finite amount of oil in the world. But guess what? Oil prices can't seem to stay on that oomph. They get fought and they get pushed down. And some would say that oil is a lot more scarce than BTC because the demand for oil is through the roof. MC Prosperity's got it right. We need this SEC case to end and then everything changes. Totally agreed. 100% agree with that. You need the case to be officially over. Settle, pay the fine, call it a day, move on. I mean, like, for real. That's what's got to go on. I like it. I really, really like it. Jonathan says, I feel like Klaus is one of those guys they need to sit on a rocking chair, drink a beer, and have a deep talk about life. I love to get done. That's why I like ultra running, because I get to talk in my own head for hours and hours and hours and hours. You wonder why I train like 10, 12, 13 hours a week? Because I get to spend a lot of it with myself. I mean, yeah, it's more fun talking with someone, but who the hell is going to run all those miles with me all this week? When will the case be over? I think after January 20th, I think you're going to start seeing some actions change. I mean, think about that. If Trump changes and leans on the SEC like instantly on day one, do you know how much more support he's going to gather? That would be so significant. So significant there. Waiting for Jerome Powell to go on the mic. When he does, I'll mute mine. I'll be hanging out in the chats. No worries. Big thing is, remember, this is the meeting that has the summary of economic projections. This is also going to be one where I believe he is going to be very, very hawkish. I am preparing myself for him to be a bit more stingy. Oh, and by the way, that post up at the top, that is my son's channel. It's free. Do me a solid, sub to the kid's channel. He's grinding hard. He's got funny ass content. The problem is, for gaming and algorithms, it's really hard to break through, so I'm trying to help him out. So if you don't mind, take a look at his channel and sub on that one. Oh, girlfriend. Oh, Jerome Powell. I mean, not yet, like, the screen's there. But, like, he's going to be walking out the door, like this one right here. And when he does, you know what I'm going to do? I'm going to mute my mic and let the good man speak. But I'm going to crank up the volume a little bit on my end as well as your end. So let's see what JP says when he walks out the door. Yeah, seriously, hopefully we do have regs by May. If we don't get it done in 2025, total failure. All right, I'm muting myself, hanging out in the chat.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has moved much closer to our 2% longer run goal. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. To that end, today, the Federal Open Market Committee decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by a 1/4 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of about 2% over the next few years. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 173,000 per month over the past 3 months. The unemployment rate is higher than it was a year ago, but at 4.2% in November, it has remained low. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than in 2019. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.2% at the end of this year and 4.3% over the next few years. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in November, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.4% this year and 2.5% next year, somewhat higher than projected in September. Thereafter, the median projection falls to our 2% objective. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 4.25% to 4.5%. We've been moving policy toward a more neutral setting in order to maintain the strength of the economy and the labor market, while enabling further progress on inflation. With today's action, we have lowered our policy rate by a full percentage point from its peak, and our policy stance is now significantly less restrictive. We can therefore be more cautious as we consider further adjustments to our policy rate. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of next year and 3.4% at the end of 2026. These median projections are somewhat higher than in September, consistent with the firmer inflation projection. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can ease policy more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. On a technical note, we lowered the offering rate on our overnight reverse repo facility to align it with the bottom of the target range for the federal funds rate, its typical configuration. Technical adjustments of this kind have no bearing on the stance of monetary policy. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Gina Smilik with the New York Times. Thank you for taking our questions. I wonder if you could talk a little bit about why officials think it's appropriate to cut rates at all in 2025 if inflation is expected to remain firm throughout the year. And what would you expect at this point the timing might look like? Would a January cut potentially be possible, or does a pause next month seem more likely?
Well, so let me start by saying why we cut today and then move to 2025. So I would say today was a closer call, but we decided it was the right call because we thought it was the best decision to foster achievement of both of our goals: maximum employment and price stability. We see the risks as two-sided: moving too slowly and needlessly undermine economic activity in the labor market, or move too quickly and needlessly undermine our progress on inflation. So we're trying to steer between those two risks. And on balance, we decided to go ahead with a further cut, and I'll give you some details on why. Downside risks to the labor market do appear to have diminished, but the labor market is now looser than pre-pandemic, and it's clearly still cooling further, so far in a gradual and orderly way. We don't think we need further cooling in the labor market to get inflation down to 2%. Job creation is now well below the level, or certainly below the level, that would hold unemployment constant. The job finding rate is low and declining, and other measures such as surveys of workers and businesses, quits, things like that, broadly show a much cooler labor market than we had in 2019. It's still quite gradually cooling. So we keep an eye on that. Inflation, we see that story as still broadly on track, and I'll tell you why. We've made a great deal of progress. 12-month core inflation, as I mentioned, through November is estimated at 2.8%, down from a high of 5.6%. But 12-month inflation has actually been moving sideways as we are lapping the very low readings of late last year. Housing services inflation actually is steadily coming down now, albeit at a slower pace than we might like, but it has now come down substantially, and it is making progress slower than hoped. And we've had recent high readings from non-market services and some bumpiness for goods. So I'll just say, so remember that we coupled this decision today with the extent and timing language in the post-meeting statement that signals that we are at or near a point at which it will be appropriate to slow the pace of further adjustments. You ask about 2025. I think that the slower pace of cuts for next year really reflects both the higher inflation readings we've had this year and the expectation that inflation will be higher. You saw in the SEP that risks and uncertainty around inflation we see as higher. Nonetheless, we see ourselves as still on track to continue to cut. I think the actual cuts that we make next year will not be because of anything we wrote down today. We're going to react to data. That's just a general sense of what the committee thinks is likely to be appropriate.
Sorry, just one quick follow-up. Why, I guess, would you make those cuts? Like, what would be the trigger to cut?
So we're to cut further after this point. I would say it this way. We've reduced our policy rate now by 100 basis points. We're significantly closer to neutral. At 4.3% and change, we believe policy is still meaningfully restrictive. But as for additional cuts, we're going to be looking for further progress on inflation as well as continued strength in the labor market. And as long as the economy and the labor market are solid, we can be cautious about as we consider further cuts. And all of that is reflected, to your question, in the December SEP, which shows a median forecast of down 2 cuts next year compared to 4 in September.
Howard Schneider with Reuters, and thanks for the opportunity to ask you a question. So this does seem similar to the dynamic in 2016 during the last transition to a Trump administration, where the committee saw slightly tighter policy, in part in expected anticipation of the fiscal policy stance that was seen evolving over the year. Some of it was a data mark-to-market exercise, and some of it was anticipation of fiscal. What's the split on this one? How much of this was accounting for inflation data that was coming in, and how much of it is expecting that there will be inflationary fiscal policy next year?
I'd say I'd point to 5 or 6 things, and let me start by saying that we think the economy is in a really good place, and we think policy is in a really good place. Let's remember that the economy is growing 2.5% this year, that inflation has come down by 50% from 5.6% to 2.6%. Headline inflation is 2.5% on a 12-month basis. We're actually in a really good starting place here. But since, so what's really driving the slower rate cut path? First thing is growth is stronger, right? The economy grew faster in the second half of 2024 so far than we had expected, and is expected to be above what our expectations in September next year as well. Unemployment is lower, and in the SEP you'll see that participants think that the downside risks are less and uncertainty is less. So that's more strength, right? Inflation is higher, as we talked about. Inflation's higher this year. It's also higher in the forecast next year. I'd also point out that we're closer to the neutral rate, which is another reason to be cautious about further moves. But then getting to your point, there's also there's uncertainty. Uncertainty around inflation, I pointed out, is actually higher. It's also in the case of some people, the way I would say it is this. Some people did take a very preliminary step and start to incorporate highly conditional estimates of economic effects of policies into their forecasts at this meeting, and said so in the meeting. Some people said they didn't do so, and some people didn't say whether they did or not. So we have people making a bunch of different approaches to that. But some did identify policy uncertainty as one of the reasons for their writing down more uncertainty around inflation. The point about uncertainty is it's kind of common sense thinking that when the path is uncertain, you go a little bit slower. It's not unlike driving on a foggy night or walking into a dark room full of furniture. You just slow down, and so that may have affected some of the people. But as I said, there's a range of approaches on the committee.
If I could follow up on that, you mentioned the risk and uncertainty indexes toward the back of the document. The upside risk to inflation jumped quite substantially. The only thing really that's happened, you mentioned that the disinflationary story remains intact, yet the risk weighting has jumped to the upside. The only real thing that's happened is November 5th in the meantime. Is it fair to say that that's what's driving the higher sense of upside risk on inflation?
Actually, that's not the only thing that's happened. What's happened is that our forecasts for inflation for this year, I think, are 0.5 higher than they were in September. So you had 2 months of higher inflation in September and October. As I mentioned, November is back on track, but once again, we've had a year-end projection for inflation, and it's kind of fallen apart as we've approached the end of the year. So that is certainly a large factor in people's thinking. I can tell you that might be the single biggest factor is inflation has once again underperformed relative to expectations. It's still going to be between 2.5 and 3. It's way below where it was, but we really want to see progress on inflation. As I mentioned, as we think about further cuts, we're going to be looking for progress on inflation. We have been moving sideways on 12-month inflation as the 12-month window moves. That's in part because inflation was very, very low measured in the fourth quarter of 2023. Nonetheless, as we go forward, we're going to want to be seeing further progress on bringing inflation down and keeping a solid labor market.
Chris.
Thank you, Chris Rugaber at Associated Press. Thanks for taking the question. In September 2018, the Fed staff in the Teal Book discussed a policy of looking through any new tariffs as long as there were one-time increases and inflation expectations remained anchored. Could you comment on if that analysis remains effective and any other thinking on tariffs generally that you can share?
So I do think that the September 2018 Teal Book alternative simulations are a good place to start. I happen to have brought them here with me today. I'm sure you have them too. They're a good starting point, and I would just say, it's 6 years old analysis, but nonetheless, this is still, I think, the right questions to ask. And there were two simulations. One was seeing through, one was not. And I'd point you. There's some language in the see-through paragraph that says, that considers situations in which it might be appropriate to see through inflation, and then names some conditions that in which it might not be. In any case, this is not a question that's in front of us right now. We won't face that question. We don't know when we'll face that question. What the committee's doing now is discussing pathways and understanding, again, the ways in which tariff-driven inflation can affect, tariffs can affect inflation in the economy, and how to think about that. So we've done a good bit of work, all of us have, each of us has, and it puts us in position when we finally do see what the actual policies are to make a more careful, thoughtful assessment of what might be the appropriate policy response.
Great. And just a quick follow-up. Given the recent bout of inflation that we've been through, with consumers seeing how prices can rise and businesses seeing that they can raise prices at least for some time, does that make it a little bit riskier to look through tariffs? I mean, do you feel you have to respond more quickly to inflation threats, given what we've seen in the past few years?
So the main thing is, and this is also a point in these alternative simulations, is there are just many factors that go into how much tariffs will even go into consumer inflation. How persistent will that be? And so we just don't know really very much at all about the actual policies. So it's very premature to try to make any kind of conclusion. We don't know what will be tariffed from what countries, for how long, in what size. We don't know whether there'll be retaliatory tariffs. We don't know what the transmission of any of that will be into consumer prices. To your point as well, I wouldn't say that we know whether the last episode is or is not a good model for what happened. You pointed out we've just been through a period of high inflation. We've just gotten through that period. That's a difference. There was also quite a bit of diversion of trade away from China to other countries since that. That may have effects. I don't know. I just think we need to take our time, not rush, and make a very careful assessment, but only when we've actually seen what the policies are and how they're implemented. And we're just not at that stage. We're at the stage of doing what other forecasters are doing, which is kind of thinking about these questions, but not trying to get to definitive answers for some time.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, to make sure I understand, participants today revised up their core PCE inflation projection for 25 so that the central tendency runs from 2.5% to 2.7%. And as Howard noted earlier, most of the committee sees the risks to those projections to the upside. So if inflation only declines next year from 2.8 to 2.5 to 2.7, what would compel the committee to be cutting in that situation?
Let me find these numbers. So we have inflation coming down, core inflation coming down to 2.5 next year. That'd be significant progress. You see a slower path. I think that does take on board that we want to see real progress, but we'd be seeing meaningful progress to get inflation down to that level. That wouldn't be all the way to 2%, but that would be better than this year. This year will be 2.8 or 2.9. That would be meaningful. We also have to think about the labor market, and while we have the labor market forecast as being in good shape, we are also mindful that it is still out there very gradually cooling, so far in an orderly, gradual way. But it's also something we need to keep our eye on.
I guess if I could follow up, if somebody looked at these projections and also the insertion of the extent and timing language in the statement, which has been used at times in the past when the committee thinks maybe it's going to be on hold for a while, and they said, gee, this looks like it could be the last rate cut for some time, would they be mistaken to infer that?
So that's not any decision that we made at all. Let me explain extent and timing. So the sense of that wording is to make clear that if the economy does evolve about as anticipated, we're at a point at which it would be appropriate to slow the pace of rate cuts. So extent, that just relates to how much further we can reduce our policy rate consistent with getting to a neutral stance. Clearly, that distance has shrunk by 100 basis points. So it's significantly smaller. So that's the extent question. And we're going to be looking for further progress on inflation as well as a strong labor market to make those cuts. Timing just suggests, again, that we're at a place where we assuming the economy develops as expected, we're at or near a level that will make it appropriate to slow the pace of adjustment. So that's what we mean by that. We're not trying to make decisions about the longer run. We're trying to make sensible policy as we go. And I just would emphasize the uncertainty, which is it's just a function of the fact that we expect significant policy changes. There's nothing really unusual about that. I think we need to see what they are and see what the effects they will have. We'll have a much clearer picture, I think, when that happens.
Mike.
Michael McKee from Bloomberg Radio and Television. Even though you've cut rates by 100 basis points this year, we haven't seen much change in mortgages, auto loan rates, or credit card rates. You say you're significantly restrictive. Are you running a risk that the markets are fighting against you and the economy could be more at risk of a slowdown than you anticipate?
So the rates that you talked about are really longer run rates, and they are affected to some extent by Fed policy, but they're also affected by many other things. And longer rates have actually gone up quite a bit since September, as you well know, and those are the things that drive, for example, mortgage rates more than short-term rates do. So we look at that, but we look at all financial conditions, and then we look at what's happening in the economy. So what we see happening in the economy, again, is most forecasters have been calling for a slowdown in growth for a very long time, and it keeps not happening. So we're now well into another year of growth that looks like it might be 2.5%. Second and third quarters were right about at the same level. So the U.S. economy is just performing very, very well, substantially better than our global peer group. And there's no reason to think a downturn is any more likely than it usually is. So the outlook is pretty bright for our economy. We have to stay on task, though, and continue to have restrictive policies so that we can get inflation down to 2%. We're also going to be looking out for the labor market. We want to keep the labor market pretty close to where it is. We're pretty close to estimates of the natural rate of unemployment. Job creation is a little below the level that would keep it there, but nonetheless close. And so that's what our policy is trying to achieve.
If I could follow up by asking about your formulation for beginning rate cuts included the phrase, we need to have confidence that inflation is moving down towards our target. Given the fact that you've raised your forecast for next year, do you have confidence or are you uncertain about the path of inflation going forward?
So confidence was our test for raising rates, and we made, look at the broader sweep, we've made just a great deal of progress. We're well into the twos in core inflation, and around 2.5 or even lower than that we have been for headline inflation. So I would say I'm confident that inflation has come down a great deal, and I'm confident in the story about why it's come down and why that portends well, and I'll tell you why. Again, you do see with housing services inflation, which is one that we've really worried about, it really has come down now quite steadily at a slower pace than we thought, 2 years ago, but it's nonetheless steadily coming down as market rents, as market rents start to equilibrate better with, new leases that turn over, not new tenants, but new leases. Market rents is new leases. So that's happening. That process is ongoing pretty much as we expect. Goods inflation, which is another big piece of it, has returned right to the range where it was before the pandemic. Just for some months this year, it kind of moved up in a bumpy way because of used cars and things like that. But we think overall that should generally be in the range it was in. That leaves non-housing services, and market-based non-housing services are in good shape. It's non-market services, and those are services that are imputed rather than measured directly, and they don't. We think they don't really tell us much about the about tightness in the economy. They don't really reflect that. I mean, a good example is financial services, which is really done off of asset prices. And that's how that inflation works. So the overall picture, the story of why inflation should be coming down, is still intact. In particular, the labor market. Look at the labor market. It is cooler by so many measures now, modestly cooler than it was in 2019, a year when inflation was well under 2%. So it's not a source of inflationary pressures. Not to say there aren't regional and particular professions where labor is tight. But overall, you're not getting inflationary impulses of any significance from the labor market. So what's the story? The story is still just we're unwinding from these large shocks that the economy got in 2021 and 22 in, for example, housing services, and now also in insurance in particular, where costs went up, and those are now being reflected later in housing insurance. It's real inflation, but it doesn't portend persistently high inflation. So we and most other forecasters still feel that we're on track to get down to 2%. It might take another year or two from here, but I'm confident that that's the path we're on, and our policy will do everything it can to assure that that is the case.
Colby. Thank you. Colby Smith with the Financial Times. So the unemployment rate as of November, while still very low, is within spitting distance of the level that generated a lot of concern about the labor market over the summer in the lead up to the 50 basis point cut in September. Hiring has also narrowed to just a handful of sectors. But now the committee appears comfortable skipping cuts at upcoming meetings. So what has changed about the committee's assessment of the risks confronting the labor market? Is there just less concern now on that front, or is it just about there being more upside risk to inflation that now needs to be accounted for?
The unemployment rate is now the same as it was in July, 4.2%. It's moved up and down, but it's now the same as July. And job creation is lower than it has been, but it's been steady. It's not declining. It's steady at a level which, as I pointed out a couple of times, is actually below the level that would hold the unemployment rate constant, but it's not so far below. So you might, if we have the break-even level right, and if job creation continues at that level in the establishment survey, then you would get a tenth maybe every other month kind of thing. So gradually declining. We don't have that kind of precision in this. So, but you're right, though, and I read out some of the reasons. We do think the labor market is still cooling by many measures, and we're watching that closely. It's not cooling in a quick or in a way that really raises concerns. I think you pointed out participants in the FOMC really thought that the risks and uncertainty had improved relative to the labor market, and it's because things have just gotten a little bit better. It doesn't, the unemployment rate flat and things like that. Nonetheless, we're watching it closely.
If the idea, though, is that no additional kind of softening in the labor market is welcome here, what's to prevent that from happening if rates are still restrictive?
So what I said is we don't think we need further softening to get to 2% inflation. That's what I'm saying. Not that it's not welcome. We don't need it, we don't think. If you had a situation where inflation's moving around by a tenth every few months, that's, we'd have to weigh that against the fact that inflation has, in recent months, been moving sideways in the 12-month window. And so we've got to weigh on both. And at this point, for a while there, we were only really focused, mainly focused on inflation. We've now gotten to a place where the risks to the two are, we think, are broadly, roughly in balance. And so that's how we think about it.
Steve.
Mr. Chairman, I did not hear you use the word recalibration today. And I'm just wondering if the recalibration phase is over and what you might call this new phase and whether the criteria for changing rates is somehow different and higher than it was before. Thanks.
We're not renaming the phase yet, but we may get around to that. But no, I would say we are, though, in a new phase in the process, as I said. So, and that's just because we've reduced our policy rate by 100 basis points. We're significantly closer to neutral. We still think where we are is meaningfully restrictive. And I think from this point forward, it's appropriate to move cautiously and look for progress on inflation. We've done a lot to support economic activity by cutting 100 basis points, and that's a good thing. I support the decision, and I think it was the right decision to make. I think from now, we are in a place where the risks really are in balance, and we need to see progress on inflation, and that's how we're thinking about it. So it is kind of a new thing. We moved pretty quickly to get to here, and I think going forward, obviously, we're going to be moving slower, which is consistent with the SEP.
I wonder if I could follow up and ask you how much you or the committee are looking through some of the high numbers we've had in the recent inflation numbers. For example, cars being up maybe because of the hurricanes, eggs because of the avian flu, that kind of stuff, and then looking forward perhaps to housing inflation coming down as it did in the recent report.
So we always try to be careful about not throwing out the numbers we don't like. It's just an occupational hazard is to look, those high months are wrong. What about the low months? We have a very low month potentially in November. It's estimated by many to be in the mid-teens for core PCE. So that could be idiosyncratically low. We try to look at not just a couple or 3 months. We shouldn't have, our position shouldn't change based on 2 or 3 months of good or bad data. We have a long string now of inflation coming down gradually over time. As I mentioned, 12-month headlines 2.5, 12-month core is 2.8. That's way better than we were. We still have some work to do, though, is how we're looking at it, and we need policy to remain restrictive to get that work done, we think.
Neil.
Thanks, Chair. Thank you, Chair Powell. Neil Irwin from Axios. Financial markets have been very buoyant really all year. Is the committee comfortable with where financial conditions are, or do you see a risk that looseness in financial conditions could undermine progress on your inflation target?
So we do look carefully at financial conditions, of course. That's part of what we do. But, we really look carefully at is the performance of our goal variables and how are we affecting the economy. So what we've seen over the course of, just take the last year, we've seen inflation, over the last couple of years, come down a lot. We've seen the labor market cool off quite a bit. That suggests that our policy is restrictive. We can also look more directly at the parts of the economy that are affected by that are interest sensitive, like particularly housing. Housing activity is very low, and that's partly significantly because of our policy. So we think our policy is working, it's transmitting, and it's having the effects on our goal variables that we would want. A lot of things move financial conditions around, as you know, and we don't really control those. But I'd say we see the effects we're hoping to see on the goal variables and the places where we'd expect to see it.
So if I may, speaking of assets that have been buoyant, do you see any value or benefit in the U.S. government building a reserve of Bitcoin?
We're not allowed to own Bitcoin. The Federal Reserve Act says what we can own, and we're not looking for a law change. That's the kind of thing for Congress to consider, but we are not looking for a law change at the Fed.
Andrew.
Hey, happy holidays, Mr. Chairman. Thanks for taking our questions. I was wondering if you are satisfied with the way 2024 is ending, if you're confident that we've avoided the recession that forecasters were predicting as inevitable a couple years ago.
I think it's pretty clear we've avoided a recession. I think growth this year has been solid. It really has. PDFP, private domestic final purchases, which we think is the best indicator of private demand, is looking to come in around 3% this year. This is a really good number. Again, the U.S. economy has just been remarkable, and it's when in these international meetings that I attend, this has been the story, is that how well the U.S. is doing. And if you look around the world, there's just a lot of slow growth and continuous struggle with inflation. I feel very good about where the economy is and the performance of the economy, and we want to keep that going.
The other thing I just wanted to ask about was the you guys have noted that the unemployment rate is still low. However, employment rates have fallen rather quickly. The prime age employment rate has fell by about half a percent rather recently. The question, I guess, is do you think there's maybe more downside momentum in the labor market than the unemployment rate alone is signaling?
I don't think so, no. I think overall, if you look at it, prime age participation is still very high. What's going on in the labor market is that the hiring rate is low. So if you have a job, you're doing very well, and layoffs are very low, right? So people are not losing their jobs in large numbers, unusually large numbers. If you are looking for a job, though, the hiring rate is low, and that's a signal of lower demand. It has come down. So we look for signs like that, and that's clearly a sign of softening, further softening. I didn't mention it earlier, but I think you can see an ongoing gradual softening in the labor market. Again, not something we need to see to get 2% inflation, and that's part of the reason that explains why we moved ahead today with the action, with an additional cut. So, but you take a step back, the level of unemployment is very low. Again, participation is high. Wages are at a healthy and ever more sustainable level, wage growth. And so the labor market, this is a good labor market, and we want to keep it that way.
Thanks.
Amira.
Thank you. Amara Mokway from Bloomberg News. I just want to put a finer point on the labor market. Can you keep the labor market this way, in the strong position that you have described, without further cuts? In other words, do you still view the labor market as needing support to protect against a further cooling?
We can't know that with any tremendous certainty. I will say that we think that our policy balances the risks. We think the risks are roughly in balance as between the two mandates, and we think the labor market is in solid shape. And when I say it's softening or cooling, it's a very gradual process. Job creations are meaningfully positive. Wages are, if anything, still a bit above what would be sustainable if productivity were to revert to its longer run trend. If you take into account the high productivity readings we've had, then wages are already at a sustainable level relative to 2% inflation. So, I don't want to overstate the downside in the labor market, because the downsides clearly appear to have diminished. Nonetheless, it's one of our mandate goals, and we pay close attention to it, and it's worth noting that it is still gradually cooling, gradually and in an orderly way. And that's how I would characterize it, and that's why we're paying careful attention.
Elizabeth.
Thanks so much, Chair Powell. Elizabeth Schulze from ABC News. As you've noted, the Fed is now forecasting higher inflation next year. High prices are still a burden for so many households right now. Why do you think it is that inflation is proving to be more stubborn than you'd expected?
It breaks down into a long answer if you want, but it just has been a little bit more stubborn. I think if you go back 2 or 3 years, many people were saying that to get this far down, we would have had to have had a deep recession and high unemployment by now. Well, that has not been the case. So, the path down has actually been much better than many predicted. We've managed to have the unemployment rate remain essentially at its longer run natural rate, while inflation has come down from, core PCE inflation has come down from 5.6% to 2.8% on a 12-month basis. So that's a pretty good outcome. Why hasn't it come down? One reason is that just a technical issue around the way we calculate housing services, and that process has been slower than market rents are showing up more slowly in that measure than we might have thought 2 years ago. So that's part of it. I think there are other parts of the story, but what I think people are feeling right now is the effect of high prices, not high inflation. So we understand very well that prices went up by a great deal, and people really feel that, and it's prices of food and transportation and heating your home and things like that. So there's tremendous pain in that burst of inflation that was very global. This was everywhere in all the advanced economies at the same time. So now we have inflation itself is way down, but people are still feeling high prices, and that is really what people are feeling. The best we can do for them, and that's who we work for, is to get inflation back down to its target and keep it there, so that people are earning, big real wage increases, so that their wages are going up, their compensation is going up faster than inflation year upon year upon year, and that's what will restore people's good feeling about the economy. That's what it will take, and that's what we're aiming for.
And as we look ahead to next year, what do you see as the biggest challenge to the economy under the next administration?
I feel very good about where the economy is. Honestly, I'm very optimistic about the economy, and we're in a really good place. Our policy's in a really good place. I expect another good year next year.
Edward.
Thanks, Chair Powell, for doing the questions. Edward Lawrence from Fox Business. So you say that we're closer to the neutral rate. What % do you see and the committee believes, where is that neutral rate?
So I'll say a couple things. First of all, when we write, the thing we write down in the summary of economic projections is the longer run neutral rate, which is the neutral rate at a time when supply and demand are in balance, the full economy is in balance, and no shocks are hitting the economy. That is not where we are right now. So when we're making monetary policy at the Fed, that's not the question we're asking. So you can't do a straight read between those longer run numbers that we write down and what we think the appropriate policy should be. So basically, at any given time, various shocks are hitting the economy. And so what we're doing in real time is we're looking at our policy stance, and we're looking at the way it's hitting the economy, and particularly we look at the effects it's having as we try to move the economy toward maximum employment and price stability. And the answer can be, there are things that affect the economy that are lasting but not permanent. And the ones that are permanent are the ones that would be in our star. The ones that could be lasting but nonetheless go away over time, they could actually affect what's sort of technically the appropriate neutral stance in near term. So we're looking at that, and we don't know exactly where it is, but as I like to say, we know it by its works. And I think what we know for sure is that we're 100 basis points closer to it right now. There are many estimates of where that might be, and we know we're a lot closer to it, and I think we're in a good place, but I think from here, it's a new phase, and we're going to be, cautious about further cuts.
But I think that the markets are looking for a little more clarity. I mean, I've heard estimates from 2.9% to 4%. I think the markets would like to see a little more clarity about a year out, 18 months out, as to where that goalpost, for lack of a better term, is, because at the moment it looks big.
Yeah, I mean, honestly, there are countless models of what a neutral rate might be at any given time. There are empirical models, there are theoretical models, there are things that combine them, and they have as many different answers as you'd like. So there is no real certainty. And I mean, it's actually a good thing to know that we don't know exactly where it is. So you're not tempted to think, oh, I think this model or this estimate is right. You just have to be open to the empirical data that are coming in, and also how it's affecting the outlook. And it's not made any easier by the fact that that our policy works with long and variable lags. Nonetheless, that is the job we have, and so I think it's appropriate for us now to proceed cautiously, now that we're 100 basis points closer to neutral, and we'll do so. Meanwhile, the economy seems to be in good shape, and these cuts will certainly help to support economic activity and the labor market. while we can still make progress on inflation because policy is still meaningfully restrictive.
Victoria.
Hi, Victoria Guida with Politico. I just wanted to make sure I understood what you were saying at the beginning about inflation. Are you saying that progress on core PCE counts as progress on inflation even if headline inflation ticks up? And then also, since that's what's projected in the SEP, I was wondering, what accounts for that? Why do you all see core PCE going down and potentially headline inflation ticking up?
So, and as I imagine you know, the goal overall is headline inflation because that's what people experience. People don't experience core inflation, they experience inflation, and that includes food and energy costs. So that's the overall goal. But as we know, headline inflation contains energy and food, and those prices can fluctuate for reasons that are not related to tightness in the economy and therefore are not really good predictors of future inflation. So it turns out that core inflation is a better predictor of overall inflation than overall inflation is. So we look at core inflation because it's a better measure of what future inflation is likely to be because it's a better measure of what inflation pressures exist. So it's complicated, but ultimately our goal is headline, not core. So your second question was what?
Why do you all see core going down but headline potentially ticking up?
So headline can be affected, you're talking about next year.
Mm-hmm.
Yeah, so headline it can be affected by energy prices and food prices. So that there will be things in the headline forecast that are to do with forecasts of energy prices, whereas core will be, if you look at core going out a full year, then it'll be much more driven by things like tightness in the economy. So that's why the two can go in different directions. Headline has been lower, as you know, most of this year, but that's because energy prices have been coming down, which is a great thing for people, but energy prices will come down and then they will go up, and it won't really be telling us anything about how tight the economy is and how future inflation will perform.
Do geopolitical risks factor in at all to how you're thinking about energy prices?
So we monitor geopolitical risks really quickly, but really carefully rather. But I would say so far those risks nothing has come out of those risks that has really been important for the United States economy. The single thing that you would look to is the price of oil, given that we're talking about the Middle East and Ukraine, but that is a good summary statistic for the kind of thing that could go wrong with global turmoil. But the price of oil has been coming down, and because of global supply conditions. So the U.S. is not feeling really the effects of geopolitical turmoil, but we are certainly at a time of elevated geopolitical turmoil, and it remains a risk.
Kelly.
Thanks, Chair Powell. Kelly O'Grady from CBS News. I want to go back to something that you said a minute ago, that wage growth is outpacing inflation now. It wasn't the case for some time, of course. It's partly why Americans haven't felt much relief in their wallets from prices yet. But with inflation ticking up, how worried are you the progress in closing that gap could go away?
Yeah, so inflation, again, we don't react to a couple of months of higher readings or a couple of months of lower readings. And what we had was we had 4 months of really nice readings, and then September and October were higher, but then November is much lower. So I don't really think the public is experiencing that as a surprising upside risk to inflation. I think inflation is much lower. What the public is feeling, and they're right about it, is that prices are just, the price level went up because of the past inflation, and it's going to take some time for real wages to recover over a period of years in which your real compensation is growing. And in other words, your compensation is growing meaningfully faster than inflation. That's exactly the kind of economy we have now, and we just want to hold on to it. That process will probably take some years, but that's what's going on right now. And I don't think that a couple of months of higher inflation really signal that anything of the nature you're suggesting.
And just one follow-up. Let's look more long-term. You previously predicted hitting the 2% inflation target in 2026. It's now been pushed out to 2027. You said you're focused on enabling further progress on inflation. That's not necessarily progress in the right direction. Are you confident that target isn't going to move further out?
We're talking about when you're projecting the economy, 3 years out, 2 years out, you're talking about high uncertainty, very high uncertainty. We really, at that point, that's not possible to confidently predict where the economy is going to be in 3 years. So what we're doing is we're looking at what's happening now, and we're kind of projecting that the same kinds of things are happening. So we keep a strong labor market. Housing services inflation comes down, goods inflation settles down, and non-market services return to their prior level. All of those things should happen over time, and those pieces come together. There's every reason to think that they will. The timing of it is highly uncertain. But you're not wrong though that it's been a bit frustrating because while we've made progress, it has been slower than we had hoped. Nonetheless, we're still on track, and I think if 2 years ago you'd said we were at 4.2% unemployment and 2.8% inflation, people would say, "I'll take that." I mean, that's a pretty good interim place to be. Job's not done, but I think we're feeling good about where we are and where we're headed.
Go to Nancy for the last question.
Hi, Chair Powell, Nancy Marshall-Genzer from Marketplace. You said a couple times inflation has been moving sideways. Appears to be settling in around, 2.5%. Do you think the Fed is just going to have to settle for that and accept that you're not going to get to your 2% target?
No, we're not going to settle for that. I think we certainly have every intention and expectations that we'll get inflation back sustainably to 2%. That is, and I am confident we will achieve that. It has taken longer, but you have to be, we are making progress. We have made a great deal of progress, and we'll continue to do so and get back to 2% inflation. That's what we owe the public, and we're committed to achieving it.
In that case, can you rule out a rate hike next year?
You don't rule things completely in or out in this world. That doesn't appear to be a likely outcome. I think we're at 4.3%. That's meaningfully restrictive, and I think it's a well-calibrated rate for us to continue to make progress on inflation while keeping a strong labor market. So, thank you very much.
Whoa, was that brutal? Holy crap. Okay, so the market obviously was a bit optimistic, which, we talked about, right? And we talked about, hey, we got to worry about Jerome. We got to worry about what he said. And oh my, as Jerome is talking, rough, man, rough. Low candlestick on XRP. Took us to 224, and that was only about 20-ish minutes ago. I've got 5-minute candlestick up on the screen. Holy crap, man, that was nasty. Look, here's the deal. Inflation is coming up. Jerome is basically like, look, if we don't get stuff coming down, we'll just pause for longer. That's not good. Now, is it enough to kill the rally? No. People are overreacting. We watch this all the time. Watch these moves all the time. All right? So basically, what we're going to be looking for now is where do we level out from this? The market's digesting the data. They're digesting all the projection materials that they have, right? The summary of economic projections. They do that kind of stuff. No big deal. But overall, not good. And when they asked him about Bitcoin, and he was like, no, not going to happen. Irrelevant One dropping some support on the channel. Everyone give Irrelevant One a big thank you. Says, thanks for bringing us the news. Happy your Santa Claus. P.S. Super stoked about your dog news. Don't know about the Dane-made American Foxhound. Yeah, I just tracked the, what do you call it? The thing. And my dog's DNA test was delivered December 17th. So they should be processing it within the next 2 weeks. So I should know, hopefully, what my doggos are. Market, though. Whoa, that's not good, girlfriend, at all. And in fact, let's do this. Let's go back one more screen here. Look at that market cap just drop heavy on Jerome News. Wow, wow, wow. Now, gonna be honest with you. We talked about this being our concern, right? That the Jerome Powell news is what we were worried about. The talk of him on the mic. And we did good. We got through the announcement, right, of the rate cut. We were cool with that. We were like, all right, awesome. Cut a quarter. But then Powell was just like not having it. In fact, he wasn't having it. You could tell the whole room wasn't having it. It was a weird vibe. Bipolian joining the channel. Member for 1 month. Appreciate that. Entry supporter. Love it. Yeah. Gonna be watching the charts here close. That was a heavy reaction to the market. Now, what would the market be pricing in? Well, we know what the market's pricing in, right? The market is pricing in a hold in January right now. That is what you're looking at. A hold in January. Right now, the market is saying 96% chance hold in January. So the market's pricing in the hold, which is okay. Not a big deal. That's the thing, though. We got to get through to January 20th. Right? We got to get through to the new regime taking over. We got to get through the fear of Gary Gensler going after RLUSD. Because seriously, we got to be honest. Would you put it past Gary to like try something? Would you put it past him to do something stupid on his way out? I mean, there's a lot of players out there that are anti-crypto, and those players are still in control. Those players still have a lot of power. Those players are still fighting for all the money they get from traditional finance outlets like banks out there. So just because they lost the election doesn't mean they're not going to fight. No, they're definitely going to fight. They're going to fight because that's where their money comes from. Oh, Dreamstorm says, imagine when he talks about raising rates again in March, April. Dude, if he talks about raising rates, the market will really, really shit itself. Adam Beaumont says, we'll drop like you said, but January will be good when Trump walks in. Yeah, totally with you on that. This is what it's about. This is about the hard time knowing what's coming, right? We know the regs are coming. We know the global shift in terms of the new digital age is starting to be here. Think, not everyone, okay? Not everyone. All right, let's be real here. Not everyone was into the internet when it first came out. It took a long time for internet adoption. And I got a few things I gotta look up here. Hold on. We got a super chat from Bipolian. Everyone give Bipolian a big thanks. His wife and I were watching a series. 2 hours later, an XRP shit a brick. Love your content. Keep it up. Bring the news whether it's good or bad, happy or sad. Suzuki gifted 10 Crypto with Klaus memberships. Awesome. Channel members, make sure you check out the member video. Robert Melvin, friend up north, says, I just hope they don't screw Trump and sell off the BTC holdings. I could see the Dems going down that road. I do have the BTC holdings. Give me a second here. I will skip all over my my porn link. Sorry, wrong PC for that. United States government has $20.8 billion overall in crypto, with right now 198,000 BTC at a value of $20.4 billion. Yeah, seriously, thanks Suzuki for those channel memberships. That was really, really awesome, Suzuki, for you to do that. Klaus, when are you going to start the JP Kaka coin? You know, the problem is the Jerome Powell coin would probably be something that people would not want to keep. They would buy it and burn it. And someone out there, someone we all hate, would be like the owner of it and would be like, dude, now I'm totally rich. You know what I mean? Like, you know that would be happening. But honestly, I don't ever worry about this stuff because the market usually overreacts to this kind of news. It's true. We've seen this time and time again. And I know some of you out there watching, this is your first time like doing a live stream with us. We've seen this before. The OG viewers, we've digested Jerome Powell. That's why we don't want Jerome Powell to leave. We know his antics. We know what to expect from him. But the new viewers, you're sitting here going, dude, Jerome's kind of an a-hole. No, but the thing is, it's not that he's an a-hole. Jerome just sticks to what he says. Now, he has been a little bit, stingy when it comes to rates. He was late to the show. But hey, overall, he doesn't have much to work with, so we get it. Sparkwater dropping some support on the channel. Everyone give Sparkwater a big thank you. And everyone that was gifted a membership from Suzuki, give them a big thank you as well. Adam Beaumont says, looks like we are pumping slightly. Cause yeah, you just got to let the market digest the news. You and I, right? We follow this crypto stuff very closely. I'm on my PC, tied to my phone, tied to some sort of like digital connection like all the time. So we're watching the charts, right? We're always kind of seeing, right? We change our alerts all the time, or at least I do. I always tell you, like what I'm changing my XRP alerts. So, just stuff like that, right? So we're really tuned in. I'm really tuned into the odds and percentages. I'm really tuned in, just all that kind of stuff, right? So with all that in mind, like for me, for you, and the videos that I've been telling you over the last few days have been exactly this. We're going to get the quarter, and then we have to just be very careful with what Jerome says. So you and I were ready for it. But a lot of the market wasn't. And a lot of the market sees quarter cut, and they're like, oh, no, we should have had a 50. So maybe they were expecting too much, right? And that's why, like, when I bring up my news, I bring it whether it's good, bad, happy, or sad. And I bring you the odds, too, so that you have an idea of how weighted, you know what I mean? Like how weighted these odds are, how weighted the information is. Now, what's the big thing we're going to be looking for? We're going to be looking for Christmas sales. Then CPI data. Going to keep an eye on the job market. We're also going to pay a little bit of attention to what's going on in other zones. If we start having inflation pop up in the Eurozone, we're going to have some problems here. If we start getting inflation kind of popping over there, we're going to be paying attention. But see, we're in this loop. We're caught up with it. Like when something happens, like big news-wise, I'm normally like no more than like 15 minutes away from my phone. And then I pass the news on to you as fast as I can. So like I said, we're in that loop really quick, and we have a really good thing on macros. I've been doing these rate decisions now for like the last few years. I've been covering them. So for me, for those of you watching, the OG viewers, or people that have been following the Fed, you know these tricks. You know what Jerome Powell does. He doesn't like to tip his hat. Doesn't like to at all. Let's see. Except for the Rectums channel. I love that. That's fucking hilarious, man. That is so hilarious. I gotta be honest with you though. Let's look at this. Watch what happens here, okay? I'm gonna go to the 15-minute chart on XRP. I'm gonna show you exactly what I'm talking about, okay? This is the 15-minute chart of XRP, and this is me zoomed out to just the tail end. This is me to like Thanksgiving, okay? Look at this. We've already had a couple tests. Do you remember that? The 60 minutes hit piece? And then the Biden thing where they told him to burn the BTC on Trump. You remember that. What about all this stuff up here? When we touched 280 and all of a sudden people were freaking out when we got back down to 230 and we're like, oh, we're never going back up there again. We went right back up to 260. We then touched 260 a few days later. So yeah, we have tests. And we're supposed to have tests. Not every day is a good day. Not every day is a green candlestick. Is the market going to react to a certain someone being negative? Well, that's not negative. And she does have a big rock on her finger, gents, so hands off, she is claimed. But like, Jerome was stingy. The market reacted to it. Jerome's been stingy in the past. XRP has dealt with Gary Gensler in the past. And no, you cannot fire Jerome Powell. In fact, Trump did an interview and even said that he was not going to be getting rid of Jerome Powell. So it's cool. It's cool. I'm awesome with it. And seriously, Suzuki, thank you for that, for the channel, the channel member donations to future members. Hopefully I said that right. So I think it's cool. Steve Middleton says, what about the Chinese holding a serious amount of BTC? Well, the thing is, Steve, is you're going to have a lot of centralization of crypto, okay? You're going to have the Chinese having a lot, the United States having a lot, the UK government owns a lot, right? What about MicroStrategy? They own a ton. What about Marathon? Yeah, I'm not calling them I'm going to call them Marathon Holdings, right? What about Marathon? They own a lot of BTC. What about Riot? They own a ton of BTC. So what you're going to have is if one person wants to exit their position, there's always someone else that wants to buy that position, right? So you're always going to have players getting into the market. You're always going to have players get out of the market. And the same thing happens with XRP. There's always going to be some whale, right? And you know this, you know the deal. There's always going to be some whale that bought XRP at like 10 cents and is like, look, I waited for X number of years and you know what, XRP, it's 250, I'm dumping. Cool. Awesome. There you go. Like, you see what I mean? Like, there's always players getting in and out. And then there's going to be another player out there, right? Think about that. I just shared with you that Marathon and Riot both bought at like over 100,000 BTC. So they're in the red. They just bought it. There's always people buying the tip because sometimes the tip becomes the base over time. Sometimes it's dips and tips. Sometimes it's pumps and dumps. Sometimes we see crazy volatility. Sometimes the market's boring as shit. We dealt with that. For 2 years, the market was boring. I mean, that's just how it's been. So now what? So now we're looking at this whole thing going, all right, cool. Shake us out here and there. We get it. But come January 20th, now what? Well, then we get the regs. Then we get the Republicans that take control, the pro-crypto people taking control. And holy shit, if they don't get anything done in 2025, then we got a problem. But the hope is that they knock out good regulations in first half of 2025. All right? Dave Miley, I'm going to bring this up because we got a lot of UK fans watching. Says this, at least you guys in the USA have got a change coming soon in January. In the UK, we are stuck with Bell and Starmer and his lying cabinet. Yeah, that's the thing. Okay, so now don't you think that like the UK is going to be maybe a couple years behind the United States, right? Like, that's what I'm saying. Like, if the US has this change that's happening in the 20th, and the UK is like, look, we elected these people, they're not doing what we need. We now need to elect someone else. Awesome. So every country is going to be at a different phase. We're going to be talking about countries in Africa buying a BTC reserve in a year from now. It's just how it is. There's always going to be different people that come to things at different times. But remember, this isn't just about Trump fixing stuff. This isn't about Biden. This is about all of us holding people accountable. Because seriously, think about that. I brought it up earlier about Chicago. Chicago votes Democratic all the time. Oh, this isn't working, so let's vote the same type of problems in. Wait a minute, why isn't this working? Let's vote the same people in. Why isn't this working? Yeah, you gotta hold your people accountable. So if Chicago were to be like, yo, we've had like Democratic rule for all this time, it ain't working, let's flip the script and go Republican, don't you think then the Democrats would be like, oh shit, we better start paying attention? And that's the point. We also have to do our job of voting out people, whether they're Democratic or Republican, independent or a damn giraffe, voting them out if they don't perform. Patrick McHenry is a Republican. And I told everyone how pissed I was that he did nothing. He threatened Gensler all the time, but didn't do anything about it. And then what happened? Gensler was like, cool, so if you're going to threaten me and do nothing about it, I'm just going to bend you over. And that's what he did. That's what he did. So if McHenry would have not threatened and actually followed through, maybe Gensler would have backed off a little bit. So could I say that McHenry, a Republican, was the answer there? No, because his performance sucked balls. What did McHenry do for us as the head of the House Financial Services? Not a damn thing. So again, it's not about being Democratic. It's not about being Republican. It's vote out losers. I don't care what side they're on. You vote those losers out, and we keep doing it to show people that, you know what? If you perform, you get the job. If you don't perform, you're gone. Plain and simple. And it's the illusion of choice only works if the public is not stupid about their choice and understands that their choice matters if you do it the right way. But if you blindly vote for this or for that, whether it works or not, then that's not how it works. Because there are some good Republican leaders. There are some good Democratic leaders. There are some really good fiscal moderates out there. There's some really good fiscal conservatives out there. But there's also some bad Republicans. There's also bad Democrats. There's also bad independents. And those bad ones that don't make our lives better need to get voted the f out. It's plain and simple. So it's not just up to Trump. It's not just up to Jerome Powell and the hot chick on the mic. I like how she holds it. She's got her grip down. It's about holding people accountable. The hope is that DOGE, Department of Governmental Efficiency, is going to find those things that are inefficient, that don't work well, that don't function correctly, and fix them. If we don't fix them, what happens? Inflation goes up. What can Jerome Powell do about the frickin' price of eggs, man? He can't do jack about it. Right? You know who can do jack about it? Our regulators out there, by making it easier for egg farmers to not have to worry about all this stuff. Why is insurance so damn expensive? Because all these doctors keep getting sued, so their insurance costs go up. Because the cost of medicine, I mean, all this kind of stuff. Vote out losers and keep voting in winners. Not because they're Democratic, not because they're Republican, but because they perform. It's never been about the color of anyone's skin. It's never been about the gender or if it hangs or not between your legs. It matters on what you bring to the table. Do you do what you say you're going to do? Do you do a better job for the public? If you don't, buy. Just how it is. Just how I feel. So, what we're looking at right now is XRP. We're going to zoom in a little bit here. We're going to go to the 5-minute candlestick-a-roni. You know the deal, guys and gals. And we want to see where we level out. Been telling you time and time again. We hold north of 220. The market is okay with that. We hold 230, better. 240 and 250 is optimistic, right? But we always said if we hold north of 220, preferably 230, we're good to go. And yes, she is hot, but yes, she is married. Just throwing it out there. Yeah, we need to 86 a whole bunch of things. Just throwing it out there. I mean, there's so much waste. There's so much junk out there in the market. So much regulation that gets in our way. Like, okay, I got one for you. Can I tell a personal story? Would y'all mind if I tell a personal story? So, I live in the upstate of South Carolina. I live very rurally. And we got hit hard with Hurricane Helene. Further north of us got hit even harder. Okay. Do you know that we still have people living in tents? Do you know that we still do not have funds distributed? Do you know that you have people that their houses have been completely wrecked by the storm and yet they've been denied by FEMA? Like, do you see the problem here? Like, these problems exist, and it's because the inefficiency of government. I do know what 86 means. I also know what 69 means. Workman official says it's never been about skin color. Then what was slavery? Slavery happened to whites and blacks. Oh, Irish slaves? Oh, you didn't hear about that? You didn't hear about the millions and millions and millions of Irish that were slaves? Oh, Native Americans are neither white nor black. They were slaves as well. South Americans? Yep, they had slaves too. Slaves everywhere. It's about performance of people. It's just how it is. Yeah, a giant F you to we the peeps. Yeah, and you do. You've always got chances to buy. You're always going to have things holding at certain levels, and take a look at them. Bitcoin's holding the 100,000. BNB's holding the 700. ADA's close to the $1. XLM's close to 40 cents. Right? So you're seeing some key things playing out. Some very key things. And remember, what was Jerome's thing? I even told you. What was the video? What was the video that I did? Let me see if I can find it. Hold on. I don't want Method Man. Do I want Method Man? No. Oh, okay. Hold on. Watch this. Hold on. Hold on. Watch what we're going to do. We're going to go to the Klaus channel, okay? And we're going to scroll down, and we're going to go to videos. And I'm going to show you a video, okay? See this one right here? 25,000 views one day ago. Jerome shutting it down. That's me telling you to the T what was going to happen today. That Jerome's job was to shut the rallies down across all markets, not just crypto markets, but all markets. I even shared it in there with you. The Dow Jones. I shared with you the NASDAQ. I shared with you what happens with crypto. And I told you that Jerome is going to cut it a quarter. And I told you that his words are going to be what shocks the market. Because he's going to be hawkish. I said hopefully not too hawkish. He threw a little shot at crypto at there. Didn't predict that one coming. That one kind of sucks. So there. Told you to the T what was going to happen. Shut it down. And that's exactly what he did. You're seeing the NASDAQ pull back. You're seeing the Dow pull back. You're seeing a whole bunch of stuff pull back. Georgie boy says, I'm dead. That was a funny slave joke. But it's true. Be educated about stuff before you bring it to the table. We've had slaves of all frickin' colors around this world. Every frickin' one has. And there's many different types of slaves, too. College athletes. Before they started getting paid, what do you think that was? Ugh, gets so frustrated. Tyler Yetzer says, our gains are being proven stable. You will see some leveling off of the market. Remember, whenever an announcement happens, you always have some people, okay? You always have some people out there that overreact to the news. And some people are like, cool with it. Whenever the news happens, it's always the overreacting right away. And then we get to what? Then we get to the real data. Beep Boop says slavery happened worldwide too, and that was about social classes. Exactly. Exactly. And there's financial slavery. You ever see those crazy what are they called? Those like car title loans and stuff like that? I lived in South Dakota for a few years, and we had some laws that we had to pass there because they were basically like bankrupting people on this stuff. 200% interest loans and junk like that. I mean, come on, man. Come on, man. So yeah. Gonna see where the market levels off. Hold north of 230, I'm cool with it. Totally cool with it. Is volume gonna be low next week? You bet your butt. So when we do this, when you and I hang out together and we watch videos and you see volume take a big poopy, you're gonna be like, dude, Klaus told me about this. And the reason Klaus said that volume is gonna be down during Christmas week is because Christmas is celebrated worldwide. Which means worldwide you're going to have a lot of people taking off. Where Thanksgiving is not celebrated worldwide. And we saw that volume went down on Thanksgiving. It's going to go down even more on Christmas and Christmas week. Christmas Eve is Tuesday. Wednesday is Christmas Day. I hope I'm right. I think I'm right. Yes, I'm right. Monday, maybe we get some fun. But dude, people are going to be off all freaking week. That's the deal. No, it's not downtrend. It's just the market's reacting to Jerome Powell. The reality is Jerome Powell said, hey, look, we got some problems here with inflation. We've had a couple reports come in hot, you know. And you're right. There are willing slaves, and there are also slaves that are unwillingly slaves. There's also people like my dad who came across. Yeah, my dad is not from this country. And had to work a whole bunch of shit jobs because he didn't speak the language. He was forced into certain jobs, into certain situations, because he did not speak English. Yeah. So there's forced on a whole bunch of different levels. There's physically forced too. There's financially forced. There's, hey, I'll get you across the border, but now you owe me your life being forced. There you go. And yes, there are willing slaves. Yes, there are. There are a lot of people that sign into agreements to get themselves across the border, but it costs them their life, essentially. That is you are willingly doing that, but the juice is worth the squeeze. So there you go. Just throwing it out there. All right, everyone. What's the deal? Are we cool with this stuff? Because I do have some things to do. Let's do this. We're going to end this stream at 3:55. Questions, comments, come right now. Last 5 minutes, it's opened up to you. I'm going to put the heat map on the screen. Don't freak out. Take a ladder if you need to. Alcoholic Click is waving, giving the thumbs up. What's up, dude? Good to see you here. I think that this is expected. I totally expected this. I even expected it so much I made a damn video about it. And Jerome did exactly what he said. The red was there to signify the red heat map. Good job, Klaus, with your foreshadowing. Well, thank you so much. I even told you that he was going to cut it a quarter. And then I told you that when he starts talking, it's going to get bad, bad, bad. So there you go. If you watch the channel, 25,000 you watched this video a day ago, bang. There you go. So, that's juicy. Alcoholic Click says, thanks, Klaus Crew. Yeah, seriously, thank you, chat, man. Thank you, chat. Chat has been awesome. Ayad Nasser says, will crypto recover? Of course. Of course. This is nothing, man. This is not the move and the strength you see here from Jerome Powell is nothing compared. Nothing compared to the overall bullishness in the market. Nothing compared. Hoofman81 says, how much longer can we hang on to the hopium? I'm bleeding cash on all fronts, stocks, 401k, and crypto. Yeah, if you check your 401k every day, if you check your stocks every day, yeah, you're gonna go crazy, especially on red days. Right? What do a lot of people do with their 401ks? You put money in and you wait. You wait till you hit your 20 years, your 30 years, and so forth. You ride some highs, you ride some lows. That's just how it is. Sometimes you got to zoom out. Don't get me wrong. You got to be informed of right now, and you have to have your alert set. So if you get past your pain points, you're good to go. But you got to zoom out. Because think about this. I'm going to zoom out to the 1 year on XRP. Does that look unhealthy? No. No. That looks really good. That looks really, really good. So yeah. Is there going to be a pullback? Sure. We had a pullback like a few weeks ago. We had a pullback right here that took us to $1.90. We're still way up from that $1.90. Again, zoom out, man. The Santa rally, the hard part with the Santa rally is you've got Christmas happening in the middle of the week, and a lot of players are going to take off financially all week. So yeah, you got to be careful about that. Just saying, you got to be careful about that. But we've been tested. What about this move right here? What about when on November 22nd we were at $1.60, and then 2 days later we were at $1.30? People were panicking then, but it was like, yo, things are coming, juicy stuff's coming. And then look, now at $1.30 we're laughing at. They're going, really? You were complaining about $1.30? Come on now. So there you go. Suzuki says, damn, I hit the like button 50 times and it reduces my likes by 49. Yeah, that's aggregate government math, right? Aggregate government math, man. We're going to be on a pretty interesting ride until January 20th. We really are. And then the first quarter of 2025 is going to be really fun. We're going to be getting a lot of insight on what's happening with the market. We're going to be getting a lot of insight. So yeah, we are at 3:54. I think I am going to put some music on. And I think then what I'm going to do is I'm going to hang out with the chat for a few minutes. I think you all know what song I am going to put on. Oh, you don't know what song I'm going to put on? Well, here you go. Enjoy.
kind of butterfly. Baby, you give me midnight. You whip up my appetite. Don't leave me here high and dry. Oh, but I don't wanna jinx it, baby. Let's not get ahead of my time. Oh, but I don't wanna miss you, baby. So I stand up and speak my mind.
Oh yeah, and I just wanted to let everyone know, if you're gonna be lonely on Christmas, or even if you like your family and you're like, look, I like my family, but I don't want to deal with them all the time, don't worry. I will be bringing you news on Christmas Eve and Christmas Day. Oh, did Klaus find an excuse to leave his parents' house if things don't go his way on Christmas Day? Mom and Dad, oh my, I have to go. The crypto markets are breaking and I need to do a story. Yeah, you'll get coverage from me on Christmas Day and Christmas Eve. Catch y'all later, and thank you, everyone.
Baby, you give me ice and fire. You're chilling wind and rain. You're some kind of butterfly. Baby, you give me midnight. You whip up my appetite. Don't leave me here high and dry. Baby, you give me ice and fire. You're channeling wind and rain. You're some kind of butterfly. Baby, you give me midnight. You whip up my appetite. Don't leave me here high and dry. Oh, 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 oh.
Well, thank you, Morgan. I have to do the outro to my live stream. And as one of you had mentioned in the comments, I can't believe Klaus didn't do what?